I think bonds are hard to own. It feels like the risk reward just really isn't there in today's point of view.
In my world, if you're not 100% Bitcoin, you're bearish.
I think some people are very against young people buying bonds because the idea is that if you're young and you're buying bonds, that's not really the asset class where you should be.
And I think right now is like a good time to be able to start figuring out where in the world do you really want to see like your currency going, your like money being invested.
I'm actually not worried about the volatility in Bitcoin at all for some reason, or maybe it's just because it's so volatile.
You know, the Canadian dollar, the US dollar, it's basically a get poor slowly mechanism.
Hey everyone, welcome to Core Life Capital. Today we have a really interesting topic to talk about. I think a lot of our listeners are talking about it, which is basically asset allocation. I think Soham talked about in our last episode, whereas now it's a little bit difficult to invest in the US. So maybe it's easier to invest elsewhere in the international market. And that's not even talking about Bitcoin, right? So let's go to Soham first. Like, what do you think about the allocation any investor in their 20s should be thinking about right now? Is it to move more of their assets overseas for maybe Europe, South America, or like a world index? What are you thinking right now?
Yeah, and I'll take one step back. I think usually investors invest inside of the capital markets, which is split into like both equities and debt. And so during times of more risk, people kind of fly away from equities, go more into debt. And in times of lower risk, people then obviously go into equities instead of debt. And I think we're getting to a point right now where, specifically in the US, it's becoming a very volatile market, as you just mentioned, George. And so now investors are trying to figure out where to be able to allocate their money. And so the traditional sense has always been like now flight to bonds. But now the most gold standard bond, which was like the US Treasury, has started becoming lower in terms of like attractiveness to investors. So now people are starting to think more internationally, as like you're mentioning. And I think right now is like a good time to be able to start figuring out where in the world do you really want to see like your currency going, your like money being invested. I think still the answer probably is USA, but I think it is that because of the idea of process of elimination, because of the other risks of different countries, more so than it just being the gold standard. If that makes sense.
Yeah, and I think some people are very against young people buying bonds because the idea is that if you're young and you're buying bonds, that's not really the asset class where you should be, right? So Matt, or I don't know, do you know anyone who buys bond in your world?
I don't know a single person who's buying bonds, man.
You're not recommending people to buy bonds.
Well, my advice is simple: buy Bitcoin and hold for the next 10 years. All the people that I know that have done that have done incredibly well. You know, Bitcoin, in particular, typically does like 200% returns year over year. Any one year might be down substantially. You know, we saw in the last cycle go all the way up to, 68,000, come all the way down to 18,000, but now it's sitting almost at 100K again. And so, we're going to repeat that cycle again and again. In my world, if you're not 100% Bitcoin, you're bearish. But, I recommend people, don't put, money into Bitcoin that you need next week.
Okay.
Put your money into Bitcoin that you're like willing to sit there and hold for the next 10 years. But I think the other thing that's weird with our generation too is that like real estate, right? Real estate is something that boomers got pretty cheap. And then we had interest rates that were ridiculously low. We had access to free, almost free debt for mortgages for a long period of time. The cost of housing's way up. And people still have this idea, especially people of our age, like, oh, like I know so many people in our age group that are like, oh, I hope I'll be able to buy a house one day, which is just insane to be in that place. I think there's a lot more people that are thinking about, well, why don't I just rent and buy Bitcoin? Because that's actually going to outperform the real estate market, for example.
Yeah, I think that's really interesting. I think in general, we've been hearing young people in the Western world, Canada, and the US, who are saying like, okay, I might never be able to own a house or own a home. On the other side, I think Matt just mentioned that the flip side is that some people are saying that you don't actually need to own a home. Maybe real estate in the 21st century at this very moment, 2020, in the mid 2020s, real estate is not king. So Soham, I know you know a lot about like real estate. Would you recommend real estate as an asset class for people in their 20s?
Yeah, I think one of the hard parts about real estate is this idea that when you go in the capital markets, it's a small amount of money you can put in. You can divide it. It's divisible. With real estate, whatever you're putting in, you're probably saving up a long time to be able to purchase one of something. And so I think at 20 something years old, putting almost all your eggs in one basket is going to be risky. It doesn't matter what that kind of basket is to a certain extent. And then like the other part that Matt's kind of mentioning is we've started getting very inflated real estate prices. In Canada, we've probably felt this more than other places in the world. The idea that most people, again, in their 20s aren't dreaming of owning a home. They're thinking about renting a home. And then that cost benefit analysis you're going to do about, oh, the property tax, maintenance at like $1 million for a very average house is kind of crazy. When I was a kid, $1 million house seemed like you're going to buy a mansion. If that isn't really the case anymore, you're deviating from real estate being of utility value and much more just of holding value. And if you want something that only has holding value, you can start looking at other things too. And like again, Bitcoin is something we've mentioned on the podcast quite a few times, but it's a new asset class that's emerging as something that's showing like proof of holding value.
Right.
If you have a net worth of $1 million, you're middle class.
Hmm.
It used to be rich. Oh, I'm a millionaire. That doesn't mean anything anymore, you know? But I'm curious for you guys, like, what does your asset allocation look like, if you don't mind sharing? And like why? Why did you choose that asset allocation? Maybe Soham, do you want to start?
Yeah, so I have about maybe like 30-40% in equities. But again, the equities I own are treasury companies for Bitcoin. And then the rest of it is in actual Bitcoin. I think I'm almost exclusively in that because when I do the calculation and the risk, I'm at a point where I don't want counterparty risk. I don't want geopolitical risk to the same amount. And the one thing I do trust beyond it all is the idea of this 21 million as a denominator. I like that idea. I think it's safe. And
Yeah,
so,
I think for me, I'm more like a contrarian in many ways. So for me, I have about 10% of my like net worth probably like in Bitcoin. And other than that, honestly, I don't think I've honestly been investing in anything. So I was investing in stocks a few months ago, but then it just became so volatile. And I realized that, okay, like I'm running a business, a startup, which is, inherently very risky, right? So do I want to put my capital in like risky asset classes as of this moment, like US stocks at this moment, right? I don't want to be scared every day when I'm checking the headlines or news. So at this moment, I'm not invested in US stocks. I'm 10% net worth in Bitcoin because I do believe in the long-term value of Bitcoin. And I think I'm actually not worried about the volatility in Bitcoin at all for some reason. Or maybe just because it's so volatile.
Wait, why aren't you worried about the volatility in Bitcoin?
I'm not worried about volatility of Bitcoin because it's been volatile, right? Like I was in my first internship in 2018. I was working at a company that was building on top of Ethereum. And in 2018, the Bitcoin crash happened, which brought down almost every other asset class. And it brought down to about $4,000. I'm not sure if I remember it correctly. And it almost feels like the end of Bitcoin, the end of the cryptocurrency industry. And my company was laying off, so it all became feel like it was the end. And look at where we are today, just a few years after. It feels like it's a new asset class. It's replacing gold. It's taking up so much in the ETF market. So I get it. Like, yes, there's going to be, volatility, right? But I think I've been dollar cost averaging into Bitcoin a lot. So I have been also considering doing the same thing with other stocks. But at this moment, I just don't think the stocks are that appealing to me at this moment, right? Maybe in a few months, I'm going to go back and say, okay, maybe dollar costing averaging into US stocks or international stocks might make sense. But at this moment, I'm just choosing to invest in something that's really simple that I understand, right? And I have to say, like in a few months ago, I'm not really understanding Bitcoin. I thought it was just like the same thing everyone else is saying. It's like a store of wealth. It's like, it's like something that you can get rich on. But after understanding it, I feel like it changes my mind quite a lot. So that's kind of my experience.
Yeah, it's funny you say like, back then you were like, oh, Bitcoin's dead. I feel like Bitcoin's died like 100 times, and every time it bounces back. So basically for you, the volatility isn't a concern because you've seen it bounce back so many times. So even if Bitcoin goes down 50%, goes down 75%, that it's going to bounce back even higher. And that's what makes you feel a bit more comfortable. What was it that like actually, what was the thing that actually, took you from, hey, not really understanding Bitcoin to Like where was the aha moment for you where you suddenly realized, oh, like this is what Bitcoin is. Like this is the piece I was missing
Yeah,
before.
I would say initially I was quite skeptical of the whole industry, right? Just first coming into the industry in 2018, getting an 8-month internship in a San Francisco startup that are doing something in Ethereum, basically smart contracts, and being inherently questionable about the company I was working at. It's a great company, but I think I was really not understanding what is the value of the product because we see so much higher drop off at the time. So coming back, I just became very skeptical of this asset in general. I was like, okay, is it just a speculative asset that goes up and down, right? And I'm sure today people still think about it that way. It's like an asset that just skyrockets to 150,000 or something, and tomorrow it can be 20,000. So I think most people right now who are not touching Bitcoin probably is afraid of that. And for me, I think at a long time, I was looking at Bitcoin in terms of the dollar value of it. I wasn't looking at something else of it. So personally, I think the aha moment for me was just understanding a little bit on the technical side, understanding that it is a finite thing. So I was looking at a little bit more than gold, right? Because technically gold is supposed to be finite. So Bitcoin is basically a digital version of that. And also like having a community, I think looking more into that, watched a few videos, and I realized that, okay, it is really valuable, obviously. So it is something I'm believing in long term because in my thing is about, building a startup. It's about long-term thinking, long-term strategy, right? So that was it for me. Yeah. So I'm curious. I'm curious about your story because I know you come from traditional finance, so you must be really knowledgeable about like the stocks, bonds, ETFs. So what do you think about allocations? Like, do you because I heard some people are saying, oh, put 10% of your holdings into Bitcoin, for example, because that's safe, right? And you're not putting too much risk. So what are your thoughts about this type of investment?
So I'll refute one thing I think Georgia said a little bit earlier about the idea that Bitcoin is volatile. I actually don't think it's volatile because I think the idea is on every halving cycle it's been on, it's always been higher up. And so at the moment you think at least it's 4 years, whatever money, like I think Matt was mentioning, whatever money you're putting in, you're going to hold it for at least 4 years. We've never seen a downturn in Bitcoin because it introduces mathematical scarcity at every halving, essentially, right? So overall, when I started looking into Bitcoin, I didn't think it was volatile once I knew that I was going to put this money in for long term, kind of the way you're mentioning, George. But what really got my gears turning was when Silicon Valley Bank was going under. The idea was that, you have a top 15 bank, the size of it is huge, and they can just like not give depositors money anymore. And then at that point, you start thinking, okay, which bank can I really trust? And can I only trust the JP Morgans? I think kind of we're a little bit more benefited in the idea that like our banks are a little bit higher regulated. And so we don't have as much of a risk on that.
Well, only 100,000 is insured, right? It only takes one mess up, and how much inflation is occurring per year, right? Hasn't the US dollar inflated 9% since, year to date, right? Like since the beginning of the year. So it's like, yeah, like you're safe to a certain extent, but then as you inflate more and more, the amount that's actually even insured in the bank becomes less and less. So yeah, I think we're insulated in Canada a bit more because there's only a couple banks, so they can kind of, keep things under check. You don't have contagion that occurs from Silicon Valley Bank going down and a bunch of others, but it still seems like risky, I guess. Like, I don't know. I guess like from my perspective, like when I look at it, I think of fiat, the Canadian dollar, the US dollar, it's basically a get poor slowly mechanism versus like, Bitcoin, like, yeah, there's volatility in any like 1 year to next, but it's also like volatility compared to what? Volatility compared to the US dollar or Canadian dollar. Like, you're right. It is like absolute scarcity that's built into it. It's the only thing that actually has that. It's even more scarce than gold, right? Eventually we will go mine asteroids, So, yeah, that's fascinating. So for you like, where was your aha moment for Bitcoin?
Yeah, I think it was the moment I stopped looking at Bitcoin as Bitcoin or like cryptocurrency, and I started looking at it as a monetary policy. And if you come at it from just like the Austrian economics like point of view on how an economy should be run, the idea is having something that, like you mentioned, so finite scarcity. That's even important to me. That's predictable. I know what that number is. Then I don't care what that number is. And then the next moment is this idea of like that constant halving. I think that makes sense and then on top of all of that, the reason why we have banks have evolved is for security. And And because of that security, what's ended up happening is banks and then like the central government kind of were able to become like one and two the same to a certain extent, right? Versus now with Bitcoin, you have that security built in through incentives. Miners will keep the hash rate going higher and higher as long as they get paid with like the block rewards. And so it just seemed like a flywheel effect where each part of Bitcoin helps strengthen the other parts of it more and more. And I couldn't find a reason why there was something wrong with it outside of just pessimism in the market itself.
Yeah, you were basically like, oh, I can't figure out a way to break Bitcoin from a monetary perspective, basically. Like you were like an economic hacker, basically. Like, oh, how is the system going to break, right?
Exactly.
Which is like exactly what the early like computer scientists that got into Bitcoin, like Hal Finney back in the day, the reason they got excited about it because they were like, oh, how do I break this, right? From a technical perspective. But you were thinking, how do I break this from a monetary perspective, which is pretty cool. Yeah.
And I think our audiences might also be asking the question about inflation, right? Because we're just a few years out of COVID. During COVID, inflation was sky high. Post-COVID, inflation is still sky high. I mean, which is slightly lower. So young investors probably have never experienced such a high inflation environment, right? So Matt, I guess starting with you. So for someone who's looking to beat inflation, would you still recommend Bitcoin as the inflation-proof asset? And are there anything else that you would recommend?
You should just, hold dollars and let your money go to zero. No, I'm kidding. I mean, I already said it, like Bitcoin is like the thing that is, you know, uh, absolute scarcity, right? Like you should be looking at your net worth in terms of like how many Bitcoin you have divided by 21 million, right? It's pretty simple. So like, I think it is like a good hedge for you being able to beat inflation. Because think about inflation too, is you don't even know what the real inflation numbers is because what do you compare it against, right? We compare the Canadian dollar against the US dollar, the euro against the US dollar, or they compare against the basket of goods and they keep changing the basket of goods that they're comparing. And so there is no, non-inflationary number that doesn't exist. One day that's going to be Bitcoin. Everyone's going to compare inflation that's occurring on whatever thing to Bitcoin itself. And I think just in general, like it's kind of the perfect hedge against the system. So, yeah. Yeah, get your capital in it.
I know you're thinking about like also like you're in the financial world. I'm sure you've seen the sky high inflation,
Yeah.
and some people are saying like just buy the S&P, which I still think it's a valid like recommendation. Just buy the S&P because it's been at 7% annually. What do you think about that advice in general?
I'll say two things. I think one, coming back just like inflation on a high level, I think Milton Friedman had a good joke. It's what to do during high inflation environments. You just say, spend it. Spend all of your money. And I think that's better advice than someone will give credit to. But on the S&P point, I think what's important that people should really understand is the returns we see in the S&P, they're on a nominal basis, which means they're not inflation adjusted. That 7% that the S&P is going up, if my money printer has printed 5% more currency, my technical return is 2%. There's just so much more money out there that part of the reason that the S&P is going up 7% is because more of that money found its way into that. And so then when you start looking at like returns from like the equities on a real basis, you realize that the risk reward is actually a lot higher on the risk side than the reward that you're actually getting. I think that should be like a good case for like people just to look into is like, hey, how much, like what Matt was mentioning, the M2 supply has gone up 9% this year. If that's true, how much has the S&P gone up this year? And then when you compare the two of them, if they're about the same or if they're even negative, that would be a big teller. Maybe this isn't the right asset class to put as much value of mine into.
I'm curious for you, George. Like, you've got a company, right? You're probably thinking about for your company, how do I protect the cash that we have in the bank? How are you thinking about like protecting against inflation?
Yeah, I was and actually is still a customer of the Silicon Valley Bank that we just talked about, which is the funniest thing. So yeah, I was there when it imploded, so it was like definitely a lot of thoughts about that.
That's scary.
It's scary. It's scary. I think today it's more about like thinking about, okay, what can cash do for you, right? And also it's about thinking about taxation on top of the cash that you have. Basically, whatever you do get out of it, the taxation is going to be a big part of the story, right? So for us right now, we're buying a lot of GICs, right, which is guaranteed investment trust, which for the instance in the US is basically like guaranteed bond, US Treasury sort of. So we're buying a lot of that. But personally, on the deeper side, I'm really just unhappy with that decision. And I think I'm just debating a lot about, I really don't want that to do that, right? So I was thinking about, potentially using corporate cash to buy some Bitcoin, but that can be controversial, in the traditional SaaS world, where people are just scrutinizing, oh, where you buy Bitcoin, we can reinvest into a company. So it's really like a debate about like what to do with that extra cash.
Well, I feel like there's more and more companies that are looking at like, hey, like putting a small amount of their treasury, like basically having a Bitcoin treasury. Like I know Tahini's, for example, they're a perfect example. They're a shawarma shop, here in Ontario, and they put a small, allocation of their capital into Bitcoin. And I think they kept increasing it. Like they would earn money in in Canadian dollars, and then they would go and put that into Bitcoin. And that grew so much over the years that they are able to, franchise their location and expand to a significant number of locations across the province. But I think the other thing too is like how much are you making in the GIC? Like 5%?
Not even this year, I think it's 3.5.
Oh my gosh.
Yeah.
How long is the lockup for the GIC?
Some of them is 1 year, some of them is 6 months. I think it's reached like a short-term decision. It's really short-term.
Wow.
Yeah.
You should look.
Decision.
You should look into the basis trade. So what's interesting in like the the Bitcoin markets is that you have futures markets that exist, right? And typically the longs pay the shorts, right? So typically the fixed dated futures, the futures actually trade at a premium. And what you can do is you can actually short that. Using where the underlying is Bitcoin itself, right? Which means you're basically just exposed to US dollars, but you basically capture that spread on the premium that exists. So like as an example, like I was just looking at it today, like you can be making like 7.4% APR in US dollars basically by just locking in that spread in essence. So like geez, like making only 3.5% in a GIC, like, oh man, you could be making 7.4. And I've seen it as high as like 10% or 11% that you could be making like per year from this. That's, essentially risk-free.
I agree. 3.5% definitely pathetic. So it's something I think about at night. Yeah. And Matt, what about your company? Like, I'm sure you guys have some treasury management system in place. Just to maybe share a little bit.
Yeah, I think 90% of our treasury is in Bitcoin, but it didn't start out that way, right? Like, here's what happens to people is like, you start off putting out a small allocation and like we needed it for like some things like related to our product. So we started out, with 5%, 10%, in Bitcoin. And what happens is that, that Bitcoin starts growing over time and then you add a little bit more and you're obviously the value of your cash is like, going down and the value of Bitcoin keeps going up. So it's not like we just came in from day one and said, hey, we're going to put 90% of our cash, into Bitcoin. It's like, oh, you start out with 10% and then at a certain point you ended up with it being 90%. And so for us, like, I think it only makes sense to have like a good and solid allocation. Now, does it make sense all the time? No, because there's cycles in Bitcoin, right? There's the bull cycles and there's the bear cycles. And so what's great about it is that, well, during the bull cycles, you can take advantage of having like a certain, percentage of your treasury in Bitcoin. And then as the bear is occurring, you can go in and lock in that basis trade. And now you're making that, 5, 7.5, 10% in USD. And when you actually exit the trade, it just goes directly to Bitcoin again. So it's kind of the perfect, cycle to be able to, and perfect treasury management solution for, for us. Yeah.
Yep. And so I'm just on the ending this conversation's note, like in 5-10 years, do you see yourself holding more Bitcoin? Do you see yourself holding more ETFs? Do you see yourself holding more bonds? Like, where do you see yourself?
I think bonds are hard to own. It feels like the risk reward just really isn't there in today's point of view. ETFs are curious because as much as I say bonds are becoming kind of bad, is a lot of convertible bond ETFs are starting to come out for Bitcoin. And I think those are interesting plays because as you want to get away from the idea of like having your risk in Bitcoin on a daily basis because you need capital for like daily life, these like convertible bonds that kind of get converted into the Bitcoin are pretty interesting because that way your cash stays at the exact same value throughout the process, right? So like you don't really have as much of a bear market as you would if by holding the actual Bitcoin. So I think as you go from a wealth growth mindset to like a wealth preservation mindset, I would start like shifting away from just pure Bitcoin. But I still think throughout all of it, everything will be centered around Bitcoin as like the ultimate asset class.
Okay, Matt, any closing note?
Amen to that. I think it is the ultimate asset class. I think it will continue to be. The only point where it will not make sense to like have all of your wealth in Bitcoin is eventually when Bitcoinization occurs. I don't know how long that's going to take. It could take 100 years where, we're on the curve where everything's priced in Bitcoin. And then people are like, okay, yeah, I'm going to have the majority of my wealth in it. But like until then, I think there's just more and more folks that are getting into it. We have the Larry Finks of the world, the CEO of BlackRock, saying, Bitcoin is making, putting the US dollar reserve status at risk. I'm bullish, man. I'm bullish.
Okay, awesome. And thank you for our listeners for listening to our discussions. Give us a like and subscribe if you like it for more. Thank you.